On Saturday, we talked about the fact that yes, we have now confirmed that crash signal we were looking for on the weekly scale, but we have yet to make the daily signals up in here that really show us that weakness. So what does that overall mean? And we're going to talk about that first off, right before we get into some technical analysis. First the SPY, Qs, Meta, Microsoft, Apple. I'm going to go over into AMC and GME. We're going to bounce into a lot of things today, but I first just wanted to clear up what is going on here. What is the bigger time frame, the weekly scale? So we should be paying more attention to the fact that we have confirmed a reversal signal, meaning a significant divergence with multiple divergences behind it as well on a weekly chart, and that is a big deal. What we're talking about on the daily scale is just like if we took a trade here and you took the course that's down in the description that's 90% off, right? Management of the trade is what we're talking about on the daily scale. If I'm going to take a weekly trade, let's say I'm taking shorts at this position for a very longer outdated option because this is a weekly chart, so I would want a lot of time behind that position. Well, what would I be paying attention to in case things go wrong, in case I need to manage my trade, which is something that we go over in a video in the course, actually down there in the description, the full technical analysis course. Well, if we look at the daily, what do we pay attention to on the shorter time frames? Well, when we're managing the trade, we look at the little bit shorter time frame. We say, hey, is that by the center line? Well, if that curls up, then it is impossible for my option to gain value as the daily is curling up into positive territory. And that's all I'm talking about here. Of course, this is a weekly signal that is confirming, and it would say that most probabilities are pointing towards more downside, but we're just aware of how we can get screwed. And that's a big thing to pay attention to if you are a trader. And we're going to go over more situations like that throughout this video. So thank you so much for subscribing. Welcome to the Sunday update, and let's get you guys some weekly expected moves and get into the SPY. All right, let's do it. SPY tipped us off about this before the Qs, but we were really waiting for the Qs because they have the more significant divergence on the MACD. But we did confirm this down for the SPY. We've kind of hung out in the same area for a few weeks now. And for me, you're at the bottom of my channel, so I'm still paying attention to the risk. The risk is that somehow we are going to turn up on the daily scale. And you see how the daily is still within range of going positive. This does not mean I am bullish right now. This does not mean when I'm bullish, it means I got money behind it. When I'm bullish, I mean I'm taking calls. Like, that's when I really consider myself actually bullish. Once I'm actually willing to risk money behind something, that's when it's bullish. Right now, it's overall bearish, right? We notice that we're below all these moving averages. We notice that. We notice that the weekly has confirmed divergence there. Okay, we notice that. We're just aware of the risk. If that turns up, we would still be close to that center line. So let's look for some weekly expected moves in case we want to catch a bounce, in case this negative trend is going to continue, right? So we're paying attention to some weekly expected moves here for the SPY. 593.68 to the upside, and down there 567.30 to the downside. I want you to pay attention to this level that the weekly expected move is at. First point to make here is look at this block in here, and if we actually end up going lower, this would be probably about the measured move down to these areas, but right in here we could get some kind of bounce to head even lower over time. We're looking for those bounces. We're looking for reversal structure in case we head back up, but we're also looking for those bounces for potential opportunities, because shorting at the low when you have a 2-hour this beat up is a little bit risky in this area, right? We've defended this level a few times. So this is something to pay attention to at this moment. This is like a little zone in here, and we see we defended it once, defended it twice, and we're holding, little flush of selling, but are we going to defend that level again? Well, we're going to have to see if this 2-hour can cross up. If the 2-hour is able to cross up, you're pretty much in a direct route to that weekly expected move, and if that would fail and actually drop through the channel and violate this little level in here, hey, you're going to get that to cross back down. Now, the reason we're talking about these things, so the reason we're talking about a bounce is because we're mainly focusing on opportunities. Is this an opportunity to go short right now, or was the better opportunity when you got confirmation down into negative territory right here, These bars in here were fantastic for the swing down on the 2-hour, but maybe you waited for this little block in here and then you said, okay, I'm going to dabble in some stuff in here because this has crossed down into negative territory. It was very likely to go to the downside, and we were looking if that could whip back up, paying attention to both sides while sitting on our hands, being patient to see what is going to happen. Now we can be patient if there is some kind of bounce and see that turn back down. Hey, you might get a trade set up just like that right there, so we'll pay attention to it. Daily expected moves, 585.40 to the upside right up here, and then you have 575.58 to the downside. That is right in our zone there, right? It's in one of our zones going across. This is where we actually gapped up from with the election, I believe, and so we're paying attention to it. But for the most part, this 30-minute is pretty damn deep into negative territory. So if it turned down, we could make a brief little 30-minute divergence here and end up going in the upward direction over time. But remember, that might just be a 2-hour dead cat bounce. We'll be paying attention to it. The weeklies have confirmed down. And the main thing we're looking for is, do the daily charts actually, are they able to curl up? Because that would be a contradiction to that weekly signal. A 2-hour going up for a bounce is not contradictory to that signal. So we're paying attention to the 30-minute tried to curl up. It's just far away from the center line, so it's going to take some work to get up there or something crazy, and that's just what we're aware of. We're going to be aware of some kind of rigged behavior that could be going on, and we're going to be paying attention to the dollar and the 10-year yield this week, especially to see if those actually are pulling down and if the market is dropping down at the same time. So really what we're looking for here is, do we make some kind of base for that 2-hour to bounce, and then do we have the opportunity to short, or are we going to see that daily just rip through and end up going in the upward direction? There's a lot that can happen with this, but taking the opportunities, if you're playing options, it's a lot about timing, because time is a very valuable thing with an options expiration. The Qs, once again, have confirmed the divergence on the weekly scale. We're just aware of the risk. If this daily curls up, it is near positive territory. That would most likely take you outside of this expected move. So that would be very, very interesting. But I just want you to notice real quick on the daily scale how controlled this really is. It's very controlled at this point. If we're going to be crashing, it's got to be uncontrolled. And right now, you're still seeing wicks come in. You're still seeing people willing to try to hold up this market. So we'll see what's going to go on with that. Now, if the daily crosses up, it might take you through that weekly expected move. But if we're going to get some kind of 2-hour bounce, hey, that'd be okay, because the 2-hour is actually showing something very interesting here. You don't necessarily see it, I believe, on the MACD or on the RSI. It's very flat, if not a little bit down here. But I want you to look at these points and look at the triple divergence that could be there, right? It's very, very close, but slightly down, I would say. So a little bit invalidated, but you still are holding the main divergence point from these lows back in the past. So if this 2-hour can curl up, it could mean a big move is coming, and that's why we want to pay attention to if we see 30-minute weakness outside of the weekly expected move. That can really help us out up towards 522.33 to the upside, and then the downside 492.05, right? We're looking for opportunities to short, and that might be an opportunity to short. Me shorting at the lows when a 30-minute is seriously beat up like this, it's not that good of a timing to do so, in my opinion, right? You notice when we got these rips, was this a good time to short? Or was this a good time to short? Was this a good time to short? Or was this a good time to short? Was this a good time to short? Hey, well, we got a bounce and it came a little bit lower, but then it ripped to the upside. These are better areas to short. So if we can find some kind of move like that, that would be fantastic for us, because that would give us the opportunity. It's not so much that the trend can't continue, it's just, will it continue right now? That's what we'll be paying attention to. Daily expected moves for tomorrow, you have 512.96 to the upside, 501.42 to the downside. And we're looking at these zones, right? We're seeing these weekly moves shift down into these zones. So the most probable thing is to head down. We're just aware of the risk in case something crazy does happen and the daily scale does turn up. Something here for the 30-minute that actually could be helpful is actually another move upward first, right? Upward first, then we actually drop down and we see something like this in this area or with our zone. That would be very helpful, because you get this MACD towards the center line, drop back down, and maybe make a divergence point for that 2-hour to bounce. And then the 2-hour could fail, and that could be a short opportunity. But in these areas, I am looking for more price action to set up something for myself, and that's what I'm going to be patient for. The reason I'm going to be patient for it is because this is stocked like Apple, right? They're reacting down to exactly where we thought they would eventually, right? 236.36, and I said, hey, this might be where the next opportunity is, right? On the daily scale. These dailies are still near the center line. If you need to go watch Saturday's video, it will really help you out. If you need to take the course so you can understand weekly expected moves and you can start to utilize them, maybe even join the Patreon, hey, that's fantastic. That is fantastic. Get it while it's 90% off. It's going away in a few weeks here. So the 2-hour here could could curl up. Does that have reversal signals? Not necessarily. You do not have the reversal signals you would like to see. So it is very likely that even Apple is telling you, hey, I need a stronger base than this one at this point. I could see some kind of rip to the upside where this actually does curl up into positive territory and it curls back down. So from Apple, we would like to see a higher low from this area, or we would like to see that reach down and test 236.36 again. I think that would be fantastic for Apple. Mainly why we're talking about 2-hour charts here the most is because the daily is by the center line. And what do we look for from stocks? Even if a weekly is crossed down, what do we look for from stocks if the daily is by that center line? We look for those 2-hour reversal signals, and guess what? We ended up going to 236.36. So we were right to point out that target, and now we just have to see if that can curl up into positive territory for the risk of more upside. But as the weekly has crossed here for Apple below the 9, reacting off of the 20, it could end up down in this liquidity very, very quickly. So we're paying attention to both sides. We're looking for the 2-hour to pop up to give us maybe an opportunity for a short position to head lower through 236.36, but we're aware of the risk that this thing can rip up one more time as it doesn't have daily divergence. This is where you get to Tesla, and Tesla, we were talking about, hey, if that can rip up and get a higher low, that would be fantastic. If it needs to drop down deeper to give you that divergence, hey, that is still possible at this point. But we are really rounding out on this overall move. So I'm inclined to go into the 30-minute here, and you're starting to see this flatness, if not slightly up actually, for the RSI in the most recent time there between these lows. So we're paying attention to the fact that this is trying to go positive now. If the 30-minute crosses down, that would still be bad, and maybe that 2-hour crosses down and we go make a divergence. But the reason we're talking about 2 hours and divergences and higher lows for something like Tesla's, 1, it has a ton of implied volatility, but 2, the daily scale is getting close to the center line. So this is when we pay, and it doesn't have the reversal signals up here. So we're paying attention to the risk that this daily could turn up. And this is kind of what I'm getting at when I was talking in yesterday's video, when I was saying, yes, the weekly confirmations are there, but we don't have the daily structure. And it really looks like a lot of these still could make the daily upward move. The weekly chart, your weekly charts are telling you something different. They're saying, nope, we're going to go down right now, but we're aware of how we can get screwed on this channel. We pay attention to both sides for a reason. I'm not someone who's just going to tell you crash a million times to help myself out with the algorithm on YouTube. I don't care. I want to be helpful to you guys, and still paying attention to risk of an upside move is a good thing right now, but also paying attention to, hey, this 2-hour could curl down, and maybe that's an opportunity for us to actually go down to our line, which is 357.78 for Tesla. Now it's time for Amazon, and Amazon is just, it's really, really holding up well. It really is. Even when you break this line, what do? You see the buying pressure come back in. You are relatively looking very flaggy in here in some way with one little blip to the upside. So this is a very interesting look for Amazon. If it is really collapsing, then it is holding up very, very well during that collapse. And look at the daily, no reversal signals again. And so we have to be paying attention to the risk if that daily does turn up, even if weekly charts have curled down and you look over at Amazon, you go, hey, there's divergence there, but this has not confirmed down on the MACD just yet. So there could be some more time here for Amazon to actually make that daily move up. Okay, so we're paying attention to it. The 2-hour chart even is looking kind of decent here for Amazon with all things considered. Some big rip around kind of moves, and we see a divergence still forming here, not confirmed for Amazon, but that would be our signal that the daily chart can curl up. We look on the RSI and we go, oh, that RSI, it's actually slightly up here and up from the previous point on both. So you kind of have triple divergence here for Amazon, and that could mean a lot. If this 2-hour can confirm up and then crosses back down, hey, that might be an opportunity for the short to take out this low and continue in the downward direction. But if that 2-hour looks really strong and we get up to these levels, we start to break through. We get up to these levels, we start to consolidate and break through. Hey, wouldn't that just be the 2-hour trying to continue a positive trend and actually shifting this around with those divergences? So we're paying attention to the 2-hour chart here because the daily is getting closer and closer to the center line. We're starting to see reversal signals pop up. And even though weeklies have confirmed, we're aware of the structure on the daily not looking very major top-like. So we have to be paying attention if Amazon is going to make some kind of upward move. Remember, we do get CPI on Tuesday. We'll see how the market reacts to that, but I just wanted to point out Amazon as it's holding up better. And this could easily open up and just cross like completely gap down if we're crashing or something like that, and we just see this thing head down over time, right? Amazon is in a place where it hasn't fully tested the 213, right? We should have put a level here, but this level right here, right around 213.50 is where I'd be looking, and then all the way down towards 207 to 208, right in this area for the gap fill. These two gap fills can be great levels to pay attention to, and even this one here, we saw the major resistance, we gap above it. We see this gap down, we use it as resistance, we pile up in there, and then we gap above it. So these two levels in here are going to be very important, but I would just really be paying attention to the structure of Amazon. It does not look very, for me, if something is forming, right? If this confirms, I'm going to go, ooh, that's kind of a bullish signal there. That is a signal that I'm willing to put money behind at that point for Amazon. Then there's Nvidia, and something big that we need to see early on in the week for Nvidia are a couple of things here. One, does the daily cross down? That would tell us, and we did update weekly expected moves on Patreon. Give it a try, guys. It's $7 a month. It's not a bunch of money, and these levels really will help you out. And we're going to put out an update video early on this week to talk about what's going on in markets. But right here, the daily scale, if that turns down, where is it? It's really close to going negative, which means we could end up testing this low, going to make a new one. That's where I'd be paying attention to 125 or my weekly or monthly expected moves. Remember, what was up here? A weekly expected move. What happened? Bad things. So what's down here? What if there's a weekly expected moves and you go like this and then good things start to happen? Are you ready to react? That's the big thing. So we have to see reversal signals and things like that. But the 30-minute, we did call out as we did break through 141.12 that we could end up down towards 135 again to retest that level where we made great flagging, great little divergence in here to actually head to the upside. Fantastic for a 2-hour curl up. Do we see that right now? Not necessarily. If anything, you have a little bit of flagging here. You could end up making it early on. We'll pay attention. I would like that to come up first and reject and then retest that level, because that would make the MACD look very nice and make it very simple for yourself for some kind of 2-hour bounce. Now, the 2-hour bounce that could come, where are you right now? Well, the positioning of the MACD is kind of in a spot where it's like, hey, if that curled up, where would it be? Positive, because the signal line is still in positive territory. If you get like 4 hours of buying here, you could be back on the bull side. But remember, if that fails at any time, it would be close to the center line, so we're paying attention to that. But I think something that mainly I'd be paying attention to for Nvidia is, does the daily cross? And when the daily does cross, what does it look like on the shorter time frames around 135? Remember that Meta, we talked about Meta in the video yesterday, and that was the big thing, right? Confusion is going to be the big word. It's C for confusion for 2025, right? If we're learning our ABC, C for confusion, because that is exactly what Meta is displaying to you. People want to get bullish on the stock. It ends up 0.84, but you see how these are almost even wicks to the downside and the upside. So you're stuck here and you're going, which way is this thing actually going to go? Well, as of right now, the daily is leaning towards what? It's crossed up in positive territory. You're still above the moving averages, so you can end up in the upward direction. And we were really paying attention to divergences that wanted to form up in here for Meta, but Meta went too fast and it actually ran into a weekly expected move and saw that resistance come in multiple times, right? Once here, once here. So Meta was very good. Weekly expected moves can really help you out with these things if you have shorter dated options, or if you like to trade back and forth like I do a lot of the time. The 2-hour has started to confirm down, but that's on the last bar of the day. And is that a good confirmation? Well, you're still technically above the 9 and above the 20 and above the 5, or on the 5 right now. So I wouldn't say that is a great cross down as of right now. So we're looking for that to extend maybe next week. But really for Meta, you're caught up in here where you kind of stuck in a range, 617.82. We need to see that hold that level. That would be better. Obviously, we need to break through the highs. We have new updated weekly expected moves for this. If you break down below 598.41, I really think you're pretty much geared up to take down this level right here. You're going to be crossing over daily charts, so testing the lows, going to make a new one very likely for Meta. As we look into a 30-minute chart, that has not curled over, so a 30-minute chart is what I would be watching first for Meta, and seeing if, hey, is this some kind of consolidation to head higher, or is this some kind of lower high at this point to actually cross down into negative territory as we are closer to the center line. So if I was watching Meta, if I had money on Meta in any way, I would be watching the 30-minute chart to start off the week this week. Throughout all this, I want you to be paying attention to Microsoft because Microsoft is doing some interesting things. Now, as of this moment, the 2 hours curled down. This looks very, very bearish, but it looks like we're seeing those buyers step in at these levels. Pay attention to weekly and monthly expected moves for Microsoft. But if that would end up going in the downward direction a little bit more and actually seeing some closing bars down in here, that actually would be nice. It would really solidify the fact that we're making divergence. So if this 2 hour can curl up, where are we going to go? Well, we could actually end up testing these highs and going to make a new one. We're making a pretty good floor here as of right now, whether you want to call this divergence or a higher low. Either way, it's really close to the center line, so I like it. You're seeing that on the RSI. That's great. The 30-minute is what I'd be watching in case we are going to make some kind of downward move. Notice we are closing at the low on this 30-minute bar. We could see that extend, and then watch out if this starts to happen, because this could be your hint that that 2 hour is going to curl up, and then that 2 hour could curl up shortly after, and then you end up back in the zone, and then we got to see what happens, especially with our weekly expected moves. But these are all things that we want to be paying attention to. The daily scale for something like Microsoft, though, is a little bit deeper into negative territory. So it's great that Microsoft is making a strong base here. So if you need to manage risk, if you're playing weekly signals and have a longer outdated option, and you're saying, okay, over the next few weeks, we're going to head down, well, this daily curling up for Microsoft would completely contradict that. That would mean your timing might be off, and maybe we see some kind of lower high from Microsoft. That's right. As this is a little bit deeper into negative territory, the risk is the daily turns up and then we make a lower high, maybe retesting something like 445 when it's all said and done. So we're paying attention to these things because we know that weeklies have crossed. We're looking for opportunities to short. We're looking for opportunities to short again as things are a little beat up in these areas, but we'll see what happens on Monday for Microsoft. AMC got rid of the good signal, and we're wondering if it can come back, right? This could be considered a blip at this point, right? The failure of the signal is overall what I talk about as blips, which is when it fails really, really quickly. We didn't have the best confirmation bar, but it is a positive bar, so I was able to get some options for this. I'm still going to hold on to those options for the next few weeks just to see what happens, but we need that daily to get back into business. And if you really researched AMC, you're going, okay, well, AMC is the one that likes to gap a lot of the time, right? So maybe we need an important level to pay attention to for AMC. That would actually be 425. So 425 coming a little bit closer. And the cool thing about 425 is you can see how it is the start of some serious support that became resistance, right? Support here that became support, and then you break down through that and it becomes resistance at that point. So getting through this level would be a fantastic thing, but ultimately, what are you looking for from something like AMC? Well, that has curled down on the weekly chart, so that is not a good sign for the stock. You need that to whip back up, and we need that to break out of this overall flagging I believe you've been in for a long time here for AMC, but 425 is going to be the key level to break through this week. You guys know I like 437 a lot. Now, GME, very, very different. GME on the weekly scale just pointing in the upward direction. This is one that more so likes to melt up. And what is it doing? It's melting up. Remember, we were paying attention to the break and the retest. The break here of that 21 to 22 level breaks through, and then we see the retest, and then we're off to the races. That is fantastic. But just a daily curl up in positive territory has led to all this positivity, and now we're starting to see those little curl downs, and we do have divergences to pay attention to here. So if the daily does confirm down, we could break 28.35 if we don't hold up there. Now the 2 hour is suggesting that that is a high probability at this point. Hasn't gone negative, so it's not the highest, but still, this is something that would say, hey, this is a setup where this might be out of gas at this point, so it might need some news to project higher. What you need is this 2 hour to curl up into positive territory, and what you need is the 30-minute to curl back up into positive territory. As this 30-minute stands, it is curling down into negative, so that just means, hey, downside is something I should expect actually early on in the week from my indicators, but we know Monday and Tuesday, that's when we're really paying attention to GME. That's when it could do something crazy. So let's give you that updated level. Last week was 34.70, saw some resistance up towards that level, but for this week, we have 36.35, right? 36.35, so a little bit higher. So I'd really want 2 hour momentum with me in order to see something like 36.35 taken out. But the good part about these weekly expected moves is throughout GME, every single time, right? Weekly expected move, we raise up a little bit, and then weekly expected move, we drop down, we come back up, weekly expected move in here. What I'm trying to get at here is weekly expected moves, they keep doing this, and then they keep shifting up slightly. and then we go like that, and then we shift up slightly. And now we're shifting up again. So you're really holding some good floors in here, and that's a fantastic thing to see for GameStop. And you just want to make sure all that sounds good, looks good on your charts, and then make sure your indicators aren't confirming anything that could be very, very bad for the stock, which would be the daily scale at this point. If the daily scale does turn down, we would not necessarily be saying, hey, that's a bullish signal. We would be saying, hey, that's a bearish reversal signal in positive territory. Obviously, we're going to be paying attention to the dollar on the daily scale, still holding divergence there. If that can drop down, that could cause some positivity in stocks, and the 10-year yield, actually, if that could turn down, you're still holding some divergences there, so that could lead to some positivity in the overall market. But right now, you're mainly paying attention to downside, just so you are aware. We're looking for those bounces for opportunities to short. Don't get it confused. A weekly chart means more than a daily chart. We're just aware of the risk if the daily wants to curl up. We saw some divergences on things like Amazon and bigger stocks like that are holding up pretty well, and the dailies haven't made that topping structure. But look at the weekly for the NACD on the VIX and the RSI getting above that center line. So the weekly is saying, hey, we're about to see this pop off. So it's really important to see if we're actually going to do that this week. Now, as we go into a 2-hour, you notice that is not curled over. That is not curling over. And thank you so much for whoever just subscribed. Really appreciate you subscribing to these videos, even towards the end. Hey, you are the most likely, if you're watching all the way to the end of the video, you're getting the full info, and you are someone who is really dedicating yourself to learning. Check out those courses if you really want to, but I really think you're in the best position to be successful in markets if you're watching all the way to the end, because you're taking in all of the info, not just something that you like or something you dislike at the beginning, right? You're watching the whole thing, you're getting the full opinion, and that's great. But this 2-hour, if that can curl down, you're still in positive territory. So that could just be a curl down and then curl right back up. We still have CPI coming out on Tuesday, I believe. So we'll be paying attention to that. Something I would be looking at here is, well, all the divergences led to a pullback. Then we cross up one more time, and you're starting to see these things start to give up. So we'll pay attention if this is able to make another upward move. Maybe stocks head a little bit lower, and then watch out for a little 30-minute divergence here from volatility to open up the week. That would be interesting. Something I am watching is the hourly chart. You have confirmed divergence on the hourly chart, but you unconfirm that, right? Consider it a blip at this point, because you're starting to head in the upper direction. So I'll be watching that 30-minute chart, and make sure to join us for the live show, as we will be watching a lot of these things and talking about them in real time. So at the end of this video, for the main takeaway, I just wanted to first point out people are very, very bearish, and I think they are very, valid. I think that is valid to be bearish. You're getting weekly confirmation and things like that. But we have to notice when things are bearish, and people are really betting that things are bearish, we can see little bounces and things like that. And really, is this an actual good opportunity right now? And that's really what we're focused on. Well, this hourly's down by the RSI, so that means, hey, my reward could technically be a little bit of downside, but my risk is this could just turn up and see one of these ripping moves again. So we're really paying attention to the fact that, hey, is this the best time to short? Maybe not. Maybe we're looking for that to build up and then see that curl back down. And that's all we're getting at with the negative and positive trends going on at this moment. And then we're aware of the risk. The daily scale could curl up. And yes, for the SPY, that actually is deeper in negative territory. So we'll pay attention to weakness throughout this move at all, if it even comes. But we're paying attention to the risk. And that's important to do as a trader. So I appreciate you sticking around to the end to watch this part. Thank you guys so much for watching the video today. I really do appreciate it. Thank you guys for liking, subscribing. You guys are fantastic. I look forward to doing some more technical analysis with you throughout this week, and make sure to join us for the live show if you want to see us or ask a question about a certain stock, or maybe ask a question about that course, as it is still 90% off. The reason it is 90% off is because things were going to get confusing, things were going to get choppy, and something you can really benefit from is really learning how to understand momentum when it is choppy, really understanding when to be looking for those bounces around weekly and monthly expected moves. And that's what we talk about in the course. And we even talk about managing risk, which is a very important thing that I don't think enough people talk about. Thank you guys so much for watching. I hope you guys have a great rest of your Sunday, and I hope that you have all the luck in the world with your trades this week. I'll see you guys Monday morning. Peace out.